When you hear the name Dell, you probably think of computers and the tech billionaire Michael Dell. But what if I told you the real financial genius behind their multi-billion-dollar empire is his wife, Susan Dell? Today, we diving deep into the story of how she reportedly turned a $6.25 billion gift into a masterclass on wealth management. This isn't just about getting rich. It's about a revolutionary mindset she calls pragmatic capital. Forget everything you think you know about the ultra-wealthy. Susan Dell doesn't just spend money, and she doesn't just donate it out of emotion. She deploys it like a seasoned general, using capital as a strategic tool to generate massive returns, whether for her family or for society. It's a world where cold, hard logic triumphs over fleeting feelings. So how does she do it? Stick around, because we're about to unpack the ultimate financial hack from one of the world's most low-key power players. This could fundamentally change the way you think about money. Let's start with her approach to giving. Most people, when they think of philanthropy, picture writing a big check to a charity and feeling good about it. Susan Dell sees that as inefficient. She treats philanthropy not as a donation, but as an investment. This is the first pillar of pragmatic capital. Instead of just giving away money, she applies a venture capital mindset to solving social problems. Think about it. A traditional donation is like giving someone a fish. They eat for a day, and the money is gone. Susan's approach is to provide the seed capital for them to build their own fishing business. For example, instead of simple handouts, the Michael and Susan Dell Foundation focuses on things like microfinance. They give small loans to entrepreneurs in developing countries, empowering them to start businesses, generate income, and create a sustainable livelihood. The initial capital isn't just spent. It's put to work, gets paid back, and can then be loaned out to someone else. It creates a virtuous cycle. Another powerful example is their work in education. Rather than just funding school supplies, they make equity investments in innovative education technology startups. They betting on companies that have the potential to scale and revolutionize how millions of children learn. It's a long-term game. One of their most talked about commitments is an 18-year investment plan aimed at supporting children from underprivileged backgrounds all the way from elementary school to their first job. This isn't a one-off grant. It's a long-term strategic partnership. The magic here is the power of compound interest, but applied to social good. A one-time donation evaporates instantly, but an investment, whether in a person or a company, can grow and multiply its impact over decades. The goal isn't just to feel good or get a pat on the back for being charitable. The goal is to achieve a high SROI, or social return on investment. Every dollar deployed is expected to create a measurable, lasting, and amplified positive change in the world. It's a radical shift from charity for reputation to philanthropy for results. This is business-level thinking applied to making the world a better place. Now, let's pivot from her public-facing philanthropy to how she manages the family's private fortune. This is where the cold logic part of her philosophy really shines. You'd think with billions of dollars, you could afford to be a little reckless, a little emotional. But Susan Dell operates with the discipline of a hawk. Her second pillar is rational management, completely detached from emotion. The primary goal? Asset protection. She lives by the mantra of never putting all your eggs in one basket. After Michael Dell took his company private, they had a massive concentration of wealth tied up in Dell Technologies stock. This is a high-risk situation, even for a billionaire. So what did she do? Through their family office, known as DFO Management, she spearheaded one of the most aggressive diversification strategies Wall Street has ever seen. They systematically and relentlessly sold off tech stocks and reallocated that capital into a vast, diversified portfolio. We're talking about billions flowing into real estate, hospitality, private credit, and other sectors completely unrelated to technology. This wasn't a casual weekend project. It was a calculated, multi-year campaign to de-risk their fortune and ensure its survival for generations to come. This strategy protects the family from the notorious volatility of the tech market. If Dell stock were to plummet, a huge portion of their wealth would remain safe and sound, anchored in stable, income-generating assets. It's a defensive move executed with offensive precision. It shows a profound understanding that preserving wealth is just as important, if not more so, than creating it. This level of discipline is rare. It requires ignoring the hype and focusing purely on the data and long-term risk management. Perhaps the most impressive display of her cold logic is her mastery of the stop loss. We've all heard of the sunk cost fallacy. It's that feeling where you've invested so much time, money, or emotion into something that you can't bring yourself to quit, even when it's clearly failing. We keep throwing good money after bad, hoping to turn things around. Susan Dell does not have this problem. A perfect case study is her high-end fashion label, Phi. She launched it in the early 2000s with a lot of passion and fanfare. It was critically acclaimed, featured in Vogue, and worn by celebrities. By all accounts, it was her personal project. But when the 2008 financial crisis hit, the luxury market collapsed. The business started bleeding money. Many founders in her position would have let ego take over. They would have continued to burn cash, convinced they could save their passion project. But not Susan. She looked at the numbers, saw the writing on the wall, and made a brutal, unemotional decision. She shut the entire operation down. Immediately, she executed a perfect stop-loss to preserve capital. There was no room for regret or what-ifs. It was a purely rational move to cut her losses and prevent a small fire from turning into a raging inferno that could consume millions. This is incredibly difficult for anyone to do, let alone with a project so close to their heart. But for her, the data was clear. The venture was no longer viable, and the most logical course of action was to pull the plug. This single act tells you everything you need to know about her financial discipline. Capital preservation is paramount, and ego has no place in the boardroom. It's about making the smart move, not the easy one. So, what can we all learn from this? When you boil it all down, the core of Susan Dell's financial mindset is a powerful strategic shift. It's a move away from emotion and toward data. It's a rejection of short-term fixes in favor of building long-term, self-sustaining systems. Whether she's investing in a child's 18-year educational journey or diversifying a multi-billion-dollar portfolio, the principle is the same. She uses money not to patch up temporary problems, but to construct engines of growth. In philanthropy, this means creating systems that generate social returns long after the initial investment is made. Instead of a handout, she builds a hand-up mechanism that can run on its own. In business, it means building a diversified, resilient financial fortress designed to weather any storm, rather than chasing short-term market trends. This philosophy of pragmatic capital is a game changer. It's about being a strategic allocator, not just a spender or a saver. It's about asking, what is the highest and best use of this dollar for the long term? It requires discipline, a willingness to cut your losses, and an unwavering focus on the data, not the drama. You don't need to have billions to apply this thinking. You can apply it to your own life. Are you investing in skills that will pay dividends for years to come? Are you building a diversified financial plan that isn't reliant on one single source of income? Are you willing to walk away from a project that isn't working, even if you've already invested time and effort? Susan Dell's ultimate financial hack isn't some complex derivative strategy. It's a simple, powerful mindset. Use your resources rationally to build systems that last. What do you think about this approach? Is it too cold and calculated, or is it the smartest way to manage money and create change? Let me know your thoughts in the comments below. And if you found this deep dive valuable, make sure to hit that like button and subscribe for more stories about the hidden strategies of the world's most successful people. Thanks for watching, and I'll see you in the next video.